Okay, I'll show you. This is where Bitcoin reversed instantly. We have a move up, a move sideways, and then we are looking for the next move up. This is what we got. However, at some point, when we try to jump into the trend, at some point this trend will end. However, it's very tempting to continue buying the dip because price came back, it went up, price came back, it went up, price comes back down, we are interested to buy again. However, this move is tricky and I'll show you what happens afterward. So how can we understand how smart money sets traps for us? Well, let's have a look. So this is an order flow chart from Atas, and you can see before this big move down, right, that led to this, right, which is another liquidity search for a price to go up. But let's have a look at this move down first, because this is also another trap. Impulse correction, impulse. Buyers, retail traders try to join the trend only to be stopped out. So let's see what we can do to try to capture or understand this move down, right? Now, if you look at the delta went from positive to negative, which means that there are more aggressive sellers starting to come into the market, right? So it's being blocked, but you get the idea. It's over here, right? As well as the session delta means it means that overall there are aggressive sellers. It's starting to decrease, but overall there must be one down move because the overall session is still roughly, well, approximately there are still aggressive sellers in the market even as price went up. So you can expect some kind of move down, right? And then you have the volume. This volume is very interesting. And it's interesting because if you compare this volume, which is 179, to this volume, which is as you can see here, it is this volume would be 469. So this volume, there is a lot of transactions going on in this candle, but price did not shoot to the upside. This one only had 179, but price actually had a bigger candle body compared to this, which means that there is some absorption at the top over here. Absorption by the passive sellers. They are absorbing the aggressive buyers here, and you can expect these people to get trapped. You can infer that if there's smart money trying to keep price down, it means these aggressive buyers here are going to get trapped. So once you see the delta start to switch from positive to negative, okay, and you see the volume, you can infer that there are some passive sellers on your side. And therefore, when you put a sell, there's very little drawdown, then correction, and then this is where the Elliott waivers will start to come in. All right. So you have your first move down, you have your correction, the Elliott waivers will come in for the third wave. All right. But the main thing that we're looking at is we want to understand that this is where smart money entered. So we can be careful when price tries to seduce us into buying the dip. All right. So, yep. Thanks for watching. Trade safe.